remiss if we didn't ask you a little bit about how you're seeing the best opportunities to position portfolios. I mean, we've talked a lot about the big macro themes. I've heard you in the past discussing hard assets, soft assets. What are the assets that you are currently seeing as the best opportunities? You've mentioned CTAs as well. Those do seem to be becoming part of the conversation again, but there doesn't seem to be as much uptake as perhaps one would imagine, given the current circumstances. So I wonder if you might talk a little bit about asset allocation in this environment.
Yeah. No,
he's liberating silver. He's liberating silver right now because if it was good before, it's good now. Right?
He's done with the pain train. He's done with that pain train. That's
right. No, but jokes aside, I think an approach like the one that you guys have is it's only the beginning. I guess the 60-40 is dead. I mean, we see days like stock market down 3% and then 10-year treasury down 3.5%. I mean, you look at the 60-40 for the year. I mean, it's down 10 because both bonds and stocks are down 10. So clearly, you need to rethink your entire asset allocation, and clearly you need to broaden it to strategies that involve real assets, that involve commodities, and that involve I think quant investing properly done, not just, over optimizing back tests over the past 20 years, is going to be, for example, in the 70s, CTAs perform very well, among others. So, I don't want to preach to the choir, but I think you guys have done tremendous work here. And again, it is just the beginning. As far as the short term, it's odd for an inflation guy like me, but cash, when everything goes, the cash purchasing power in terms of assets is going up. In terms of stuff you can buy, the grocery store is going down. But I was a big LATAM bull. I call that worked really well in Brazilian real and Brazilian equities in general. Now we had a big move already. About 27%.
Peru was one of your calls too, no?
Yeah. Yes.
And they're up for the year still. Oh, they were yesterday.
Yeah, one of the few, very, very few. Now I'm almost starting to worry that, if this accelerates, the dollar keeps strengthening, you get a balance of payments issue. I started worry that we might get to this tail end scenario of things getting really nasty this summer. And then even the kind of LATAM commodity heavy, resource heavy is going to start suffering. I mean, I still would own that over, Microsoft at 10 times sales. But it could be that it gets so bumpy that it's going to be very, very difficult.
I want to parse that cash call a little bit because I think, and I could be wrong, but my sense is that because your client base, you're often talking to clients in Latin America. And I haven't looked at Latin American interest rates, so I'm not sure, but maybe in Latin America, they're allowing rates to rise commensurate with rates of inflation, right? And so cash in that scenario probably makes some prudent sense. But I mean, clearly, if the developed market central banks are explicitly pursuing a policy of financial repression where they're going to hold cash rates at 2% and allow inflation to run at 5 to 10%, cash is one of the worst places that you could park funds, tactically.